Hi everyone, Daniel here from Hmo Mortgage and Protection, your mortgage and protection insurance brokers. I hope you're liking the new video. I hope you're liking the content. If you do, please be sure to like, share and subscribe for all future videos and information on all things mortgages and protection related. Please take a look at our website by searching for Hmo Mortgages and Protection or check us out on all social channels. Thanks very much and enjoy.
Hello, and this time on the Mortgage and Protection podcast, we're talking all about HMO mortgages with Daniel Condren from Hmo Mortgages. Daniel, thanks for joining us. Always great to speak with you.
Yeah, hi Tessa, good to be back.
Are you all good? Are you all well?
Yeah, I'm a bit full of cold at the moment. I'm coughing and spluttering. I think everybody's suffering, so I'm trying to get it done before we can have our break for the festive season and everything. But yeah, I'm a bit under the weather at the moment, but I'm good. I'm all ready to talk about HMOs.
Oh, well, that's good news. I know it's that time of year, isn't it, where the colds come out. I'm a little bit the same too, but we'll get through this. So, HMOs. So, what is an HMO mortgage, first of all?
So it's a buy-to-let arrangement, but instead of it being a single dwelling for a house, it's for a house of multiple occupancy. So typically it might be for students or it might be for professionals, but it's a way to split the house down. Instead of having one dwelling, you want to split it into a HMO. So you're going to an investor would potentially get more return from their investment property.
Right, okay, well said there. And then what are the different types of HMO mortgage?
Well, it's one type. It's just the same as a buy to let. So the different types of HMO it's a mortgage of a HMO nature that you would get more rental through. So it's just like a buy to let, but instead of the consideration just of what the rental is every single month, it's going to be look at what each room is going to provide in rent. So typically you might be able to borrow more because the investment property has got it's going to earn more money. So you might be able to borrow on the actual the rental amount per room instead of just, for example, 75% of the property value. So HMOs are certainly a better return than a standard buy-to-let, but they do come with a little bit more risk. They come with a lot more of a headache, typically, because you're not just got one tenancy. You might have 5 different tenancies for each room that's in the house. So if you're not managing that and keeping on top of it, then it can cause a lot more of a headache. For example, for students, or might be more likelihood of things going wrong when it comes to making payments or damaging the property or anything like that.
Yeah, I suppose there is a lot more to think about. With more rooms come more problems in a way, I suppose, or things you need to think about. And
Yeah, that's
yeah,
it.
yeah, I suppose you don't think about all the little extras, do you? And who can get an HMO mortgage then? I mean, can anyone?
You'd want to be experienced. So my advice is that you don't just go for a mortgage or try and purchase a HMO without any experience. So certainly you would think that they've got some experience of being a homeowner or owning a property or having a mortgage already. And then the typical they transfer from having a couple of buy-to-lets and having a little bit of experience in investing in property, and then they then step up to doing a HMO and having a house of multiple occupation for students or professionals. It's not, you don't just wake up and think, I'm going to invest in a HMO because it's going to get me a lot more return. You can do that by all means, but just make sure as a customer that you're looking at what are the pros, what are the cons, what are the benefits of having a HMO against what are the downsides of having a HMO.
Okay, then. And this might be a silly question. I know people say silly questions don't exist, but can you have buy to lets as well as HMOs at the same time, sort of properties?
You can, yeah. You can certainly have uh, you can have multiple different types of mortgages
Right.
all on it, but each one is obviously got to be reviewed and looked at in isolation. Certainly with the new regulation around what is a portfolio landlord and how the industry's changed, they're not just going to look at one buy-to-let by itself. They're going to ask questions around what other buy-to-lets you've got in the background, what other HMO properties you've got in the background, and whether they are profitable, whether they're running right, they're not over leveraged. So you haven't borrowed a lot on the property, because they're going to look if there is a downturn in the housing market or something goes wrong, the interest rates rise ridiculously. The lenders are just trying to protect themselves and protect the customer, that if things go wrong, that they're not going to be left with, a property that's got negative equity or not going to be able to sell in the future. But yeah, it's anybody can have a HMO with experience, and you can have buy-to-lets as well.
Right. Okay. Brilliant. Oh, it's interesting. And then when would you use an HMO mortgage? Now, you've probably already touched on that, obviously, with the student housing and things like that.
When would you use it? I think you would, if you're an investor buying in property, you would probably use it to think, do I change my risk profile? Do I be a little bit more adventurous? Do I want more of a return for my money that I'm going to invest? So the money that you've got in capital to put into these properties, you really want to think, I could put it into a bigger investment that's going to get me more rental return, which is a big consideration to think about when you're investing money in property. Is what is the yield going to be? How much money am I going to return for cash flow? What's the potential growth of the property? So how long am I going to keep it? And what is the potential uplift, if there is an uplift, once you've converted it to a HMO? And how much will the property be worth at the end once you've done it? And if you're going to keep it for 20, 25 years, the longevity of keeping that investment is massive. So you've got the development improvement in price, the development appreciation, the capital appreciation of your money invested over a very long time. And then you're going to have your cash flow every single month from rental that's coming in, month by month. So HMOs are certainly attractive if you're not going to be put off by all the downsides and the stress of it.
Right. Okay. And then how would you arrange an HMO mortgage then? And I'm guessing this is where you can come in and help as well.
Yeah. So as a broker, we would have access to multiple buy-to-let HMO lenders that have got an appetite for this type of thing. So if you have a broker and you were interested in this, you would go to them and say, this is my plan. This is what I'm trying to do. I want to purchase this property. What is the return that I'm going to receive? How much is the mortgage going to cost? Can I do that? And a good broker should be able to talk to you about what the return of the mortgage is going to be, what the yield is, whether it's going to be a worthwhile investment for you. And the more the customer does this and understands the profit that is achievable and done it, then that's able to do when you buy-to-lets, HMOs, and invest in property, then they're going to get a bit of a taste for it, Tessa, and they're going to want to come back and do more and more and more. So yeah, you'd go to a broker or a bank if you want to be selective and just go to one bank, but certainly you'd go to a broker to make sure that they understand the situation, tell you the deals that are available, and is it going to be cost effective to do that.
Okay, then. So again, it's weighing up your pros and cons, isn't it, there? And then you've mentioned buy-to-lets several times. So how are HMO mortgages different to buy-to-let mortgages? What are the key differences, I suppose, in terms of lending criteria, cost and all of that?
The criteria is very, very much similar in relation to what's available for the lender. What the requirements are for the lender in looking at it. The affordability, the amount that you can borrow might be slightly different, because a HMO typically gives you more rental return. So you might be able to borrow more from a HMO borrowing than a standard buy-to-let. The licensing and the things that you need to be a HMO landlord are slightly different. So you might want to look into the requirements and the area that you're going to invest in. That certain local councils have made it very clear that the areas are full to capacity in relation to conversion and switching it to a HMO. So if you're going to invest and look at buying a HMO or converting it, just make sure that you can get the right type of permissions to be able to do that. How else is it different? Typically, a HMO rate, an interest rate, is a little bit more expensive, just because it's a higher risk for the lender. And the arrangement fees sometimes can be a little bit more expensive due to the nature of the customer because they're a commercial investor, a buy-to-let and HMO, the rates are a little bit more expensive. But other than that, we treat them exactly the same as a normal buy-to-let.
Okay. Again, really, really interesting and useful to know. And then, is there anything else we need to consider about HMO mortgages, Daniel?
No, I've touched on making sure that you've got a good letting agent that's going to vet your tenants properly. Make sure that they're well vetted and well managed. Because if you've got a HMO with five rooms in it, and then you've got 5 different tenants, the turnover, the occupancy, we call that occupancy, might not be as good. So you might get a turnover of the tenant a lot more frequent. So therefore, it adds more stress for you as the landlord, because that investment is not earning you money because you've got vacant rooms that are not let. So having a very proactive letting agent to market that property and make sure that the rooms are earning you enough money is very, very important. So if you do need any more information on finding a good letting agent or anything like that, you can get in touch with us and we'll do it. We'll look into that for you.
Oh, there we go. Have we touched on property standards and things like that? I suppose there's so many things, isn't there, like health and safety to cover and all of that as well to think about.
Yeah, so as the landlord, you're responsible for the health and safety of your tenant. So in relation to the electrical certificate, the gas safety of the property, fire risks and hazards and other things like that. So making sure that you're at the right standard for health and safety of the property, that it's converted and it's a true HMO. The locks of the rooms and all the other things that you might want to put in there for fire, health and safety is a big thing to consider. Standard of the property in relation to where you're going to get a HMO, or where prime location is everything. So when it comes to HMOs, if you're in a student area, more than likely it's going to be students that you're going to attract.
Yeah.
Whereas if you're next to a hospital or a busy professional area or something like that, then you're going to attract young professionals that are going to be in demand for the HMO. So when a property investor or a buyer is going to go into certain areas, that's a big consideration of the standard of where you're at, what type of property you can convert if possible. But that's what we're here to help them with as well. If it can be done, we'll also help them with that as well.
Okay, brilliant. No, it's really interesting. I think HMOs, buy-to-lets, all of that, really interesting topics to cover, aren't they? Quite exciting ones as well. So thank you for that. Do you think we've covered everything there, Daniel, that we possibly can on HMOs?
Yeah, I think so. I'm happy with that. But if anybody's got any questions or they want to reach out to me personally, you can find us on the social channels, or find us on the web on the website and just put a message in, and one of my team will be happy enough to help if anybody needs any investment advice.
Okay, well, thank you for that, Daniel, and I'm sure we will speak again soon.
Thank you.
Take care. Bye-bye.
Bye-bye.
Hi again, thanks for watching. If you'd like, share and subscribe to the channel, that would be amazing. And for more insights and information on mortgages and insurance, look out for our next video. Thanks.